Hello again. Welcome. Gabe Velazquez here, transparenttrading.solutions.com. Hope everybody's having a good couple of days of trading. I was with you last Friday, so let's go ahead and review. We have, how's everybody doing? Let's see, type in the chat if you can hear me okay. Let's see, I've got... Okay. All right. So, hey, Fernando, how you doing? Good to see you. All right, everybody. So we have Microsoft due out any minute now. And we also have, we have Microsoft and Google due out any minute now. So that should move the market. So we did have a little bit of a sell-off today. Let me just review. I only have half an hour. So obviously, if you guys have any questions, kind of just picking up where we left off on Friday. So we did come in short, as I mentioned. If you guys were watching on Friday, we came in short 40.15. That's a 4-hour distribution area. That's pretty clear on the S&P. You guys can see that 40.15 to 40.30. By the way, if you are new to the channel, please subscribe, give me some thumbs up, put some comments in the bottom there. Also, actually, I should do this before I start. We are going to look at charts together. So, it's one thing I can come here and show you all the levels or whatever, but I just think it's a little bit more instructive. And I think you guys will learn better if you guys actually have your charts open. I have a bunch of notes I take. I also obviously am looking at my charts here, so we can kind of share together, and you guys can have some comments and so forth of all the things that we do. And one of the things I would also encourage everybody to do, obviously we have a live. Typically, we have a smaller crowd, but I have over 100 views. And actually, the first one I did, I have 200 views. So some of you will come in later and view this. What I also would like for you to do is track the levels that I'm giving you so that you can kind of get a sense of what we're doing at TTS and so on and so forth. Okay. Also, I'm going to do a presentation a week from Thursday on options. So for those of you that want to learn about options, I'll be tweeting about that later as well. Okay. All right. So just to pick up where we left off. So we did come up and essentially turned right off of that distribution, 40.15, 40.30. We kind of meandered yesterday. We did get a bit of a sell-off. And we are essentially, as we come in this afternoon, we're getting a lot of volatility as you guys are watching the S&P live. I probably because of the earnings that just came out, but we're sitting right around that 39.15, 39.20, which if you're wondering where's that coming from? Well, that's basically where we broke out from. If you look at your charts again, if you're looking at the S&P currently, and you go back to your 8-hour or 240 daily chart, you'll notice that we are sitting right where we broke out from back on the 5th of July, right? You see how we kind of peaked there at 3,900, fell off pretty sharply, and then broke out. So that's kind of where I think that's where we're hanging out here at this 39.20 area. It's going to be interesting. Tomorrow we have a big Fed meeting and post. So that's going to be obviously creating a lot of volatility. So all in all, still, again, people would say, well, clearly we're still in a, bear market. And tomorrow is going to be very critical in regards to, the reaction to the Fed. Even tonight, we'll see how Microsoft, I think Microsoft just came out. All the earnings have been negative. Even yesterday, what really, if you want to ascribe the sell-off today, was because of Walmart guiding lower, and so that took down a lot of the retail stocks and so forth. So, at the moment, we're kind of just meandering around this 39.20, 39.20 and a half. I think we have to break 3,900 tonight, but again, with the Fed coming in tomorrow, it's going to be interesting. So the numbers to look at, I do have some levels below. If we do break 3,900, Okay, if we do break 3,900, there is a level that I'm very interested in getting long S&P down in the 38.45 area. You guys can look at that on your charts, about 4-hour level as well. It's a right off a turn there. You guys can see that, I'm sure, clearly. So that's still a little bit of ways. Also, let's move on to the Nasdaq, which is going to be obviously key. We've got some uh, the five horsemen, if you will, with Microsoft and Google, and then we've got Apple on Thursday and also Amazon on Thursday. So on the Nasdaq, we did come up to that higher time frame distribution, which is kind of a messy drop-based rally. I actually did a presentation about a week ago, and I spent a lot of time on that. That level between 12,650. It's a big old. I mean, it's literally a weekly rally based drop if you just draw it out, and we have pulled back from that level pretty sharply. Was that a tradable level? Well, that's really the interesting part about it was it was such a broad level that it would be interesting to see if anybody would be able to trade that on a futures contract. However, one of the things that I do talk about quite a bit is futures are just one asset class. There's options, there's TQQQ. I've been employing a lot of at TTS. We've been employing a lot of options on TQQQ, SQQQ to short the S&P. I'm sorry, the Nasdaq 100, and so on and so forth. So that's one of the things that we do quite a bit there. Okay, all right. So now where we're at now is we're all over the place. Looks like maybe Microsoft. You see again the volatility. I am interested also, just to give you guys some maybe some possible interested down around the 11,900 area. There's a nice little level that I'm interested in the Nasdaq futures. Okay, so you guys can check it out. It's about depending on the time frame you're using, I'll let you guys spot it out. It's roughly around the 11,900 area. Okay. And obviously with the Fed tomorrow, things can change dramatically. And with, even with earnings tonight, you can see the volatility coming in. And then Apple's going to be the biggie on Thursday. Okay. You guys have any questions so far? Are you guys following along with the charts? Are you seeing what I'm talking about? Do you guys have any comments, questions before I move on? I'm going to move on to the bond market next. We're only got half an hour, and I'm not going to do any blah 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 blah. We're just going to get right to the nuts and bolts, right? Right, everybody? No, you're not going to get any blah 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 from me. It's just right, because I only get half an hour. That's what I actually did that purposely, right? Yep. Just half an hour. We get right to it. No fuss, no muss. That's it. Okay. All right. So, yeah, Andrew, I haven't seen your name before. Are you new to our channel here? Yeah. Again, guys, support make sure you guys subscribe and do all that good stuff. Give me some thumbs up and all that good stuff I'm new to YouTube. Can you tell also? So I got to do all that YouTube stuff. All right. Okay. Let's move on to bonds. Bonds really obviously going to be the big mover. How does the bonds? Well, it depends on the environment. That's a question we can take offline, NB. In fact, I can, if you want to ping me on Twitter or whatever, we can set up something. Yeah, that would be. I don't have time to go into in depth on that, and the reason is because there are times where the bonds. Typically, you would have bonds as a safe haven would rally as stocks move lower, but that's not been the case. If you've been watching the bond market over the last 6 months, bonds and stocks have all been falling, right? And that's because of That's because of the current environment that we're in. By the way, the environment that we're in, I did talk about this a little bit, is not something that many of you have been around. In fact, the last time we had this kind of an inflation was obviously in the 70s. You know, Dennis was a kid, I was a kid. I remember that, right? Remember the gas lines, Dennis, and all that. So one of the things that is unusual for a lot of newer traders is understanding the current environment that we're in, where we're in a tightening. By the way, we've also been in, last time we had any kind of tightening was like 40 years ago. Yep. So this kind of tightening with inflation, essentially the bull market has been running on Fed fuel, if you will, has it not? You think about it, there was the 2000, there was the 2000 tech bust, right? There was the financial crisis 2008. Then we recently had the pandemic, as everybody obviously knows. What that did is it had the Fed just pumping money like crazy into the economy, and you could point directly to that to say that fueled a lot of especially the speculative stuff that went on after the pandemic, and all these stocks have been crushed. And I've talked about this. I don't want to get too far into that, but let's talk about levels, everybody. Right? So is it NB? NB? Yeah, you ping me, and then we can discuss it, or we can maybe have another discussion, or maybe I'll do a whole presentation on that as well. Fernando, so is that price is already is a bigger drop coming? Well, again, it depends on what actually happens. If we've already had a huge, the S&P is down about 20, the Nasdaq is down about 33, bonds have been crushed. As you know, rates have jumped dramatically, which is part of what's affecting everything else. But I think it's really has to do with how and the economy's starting to slow down, and that's I talked about this on Friday, where the bonds rallying is actually a negative for the economy, right? So in other words, the bonds are rallying. Why are rates going down if inflation's if we have hyperinflation? So, but again, that's a discussion for another time. Let's get into again, I'm long TLT calls. There is huge resistance, which hasn't been broken. 119, right? 119, 120. If you pull up the chart of TLT, which is part of what I trade quite a bit with the bond market. If you translate into the 30-year futures chart, that comes in at 143, and then 120 on the 10-year note charts. And basically we keep pushing up against those. Even today, if you look at the bonds today, where did they pull back from? Where did the 10-year pull back from, right? Check it out. 120, we pulled back from there. Where did the 30-year pull back from? 143. Where did TLT pull back from? So if you go back to Friday's recording, I mentioned those levels. Now, are we going to break out of these ranges tomorrow? I would suspect we may. If not, we still have on the 10-year, which is really the more, if you look at the bond charts, the 10-year is the most important, right? Because that's where all of the mortgages and so forth, that's where you're pegged against. So around 119, there's a little level on that if you want to catch a pullback on the 10-year, but be careful because of the Fed coming out tomorrow, right? So that's going to create a ton of volatility, really across all markets, not just the it's going to create volatility in the S&P. It's going to create volatility in across all markets, really. So that's something to really keep an eye on. We have pushed up against these levels again. The 120, the 140, the 120 on the 10-year, the 143 price level on the 30-year, and because we keep bumping up against these levels, there is now a high probability that we possibly could. Yeah, uh, that's also possibly could be a catalyst as well. Okay, all right. So we'll see what happens. We got again, Fed is everything tomorrow. Dollar is trapped in a range, and again, the dollar will fall. Yep, dollar will fall if stocks rally. Right, that's really been what's keeping the dollar. If you think about, I wrote about this weekend. By the way, if you haven't subscribed to my newsletter, go on to transparenttrading support, or I'm sorry, support at trading solutions, transparenttrading and ask for the newsletter. You get it every Sunday. I did write this Sunday about what drives the currency markets, and it's interest rate differentials. That's one thing, and also that's really the main driver of currency. So if you think about why the dollar has been so strong, think about what interest rates here in the U.S. versus Japan versus Europe, the Eurozone. You get the point. We've increased rates dramatically. The 5 years gone from like less than 1 to like 2.5, 3, right? While Japan is still at 0, negative. They just raised interest rates in Europe last Thursday, half 50 basis points, right? And so that's why this dollar remains strong. Now, if bonds break out and rates collapse and the economy slows down, that's going to really produce some weakening in the dollar. So for the time being, real simple, just look at your charts, DXY. Yeah, exactly. So look at your charts, DXY, 106.50, 107.50, really tight range, which again insinuates that we are going to have a breakout, right? So the dollar will probably have a breakout move tomorrow after the Fed, and it's all about what the perception is. Not, they're going to raise 75 basis points. But that's not really the key. Is what they talk about, and going forward. Remember that the next Fed meeting is not till September. So August we have no Fed meeting, and we got 2 more inflation numbers to come up. Okay. So any questions on bonds? Hey Gallo, how you doing? Okay, so which now let's get into the inflation part of this, right? So I've been talking quite a bit about nat gas. If you guys have been watching the past couple of recordings, nat gas blew out today, right? 9.5 was the previous high. We've got a very bullish, I've been talking about this. I've been writing about this in my newsletter with the Russians weaponizing their nat gas supplies in Europe, with a heat wave going on here and so forth. So what will happen? So today, if you again pull up your chart of nat gas, and by the way, make mention that we are trading the September nat gas contract. So we did roll over on that. You can see all the volume. So September nat gas contract is what we're looking at. So these prices I'm giving you are basis September nat gas. We basically eclipsed the 9.5 prior high in nat gas, which happened after the war, and how that back in the middle part of June, July, right? I believe. But again, historically, nat gas has traded all the way up to 15. Again, look at your weekly, monthly charts. So the question now is, and we did have a very sizable reversal today in nat gas. I believe, and I actually talked to my members this morning about this. I believe that looks to me like a blow off top, right? So what happened is, this morning it was just, raging higher, took out that 9.5, probably took out a bunch of shorts or got a bunch of people long, and then had a massive reversal, correct? So to me, and that was the first thing I talked about this morning with my in my morning market methodology session in the morning, is that looks like a blow off top to me. Now, so how do we position that? Well, the volatility is extreme in that gas at the moment, correct? I mean, that thing swung 5 grand today, just from high to low, one contract in the nat gas, in the standard nat gas contract. So there's the mini, which is a quarter size. Also, I've been talking to you about KOLD, right? If you don't know what that is, that's the ultra short trade. It's a little $12 number. Okay. That's that guy right there. And then I've been also talking to you guys about this guy right here. That's the ultra long. That thing went from $48 to close to, I think it peaked today. Not sure, not looking at it right now, but yeah, it peaked today close to $100. Okay. And so this is another way from a long-term perspective that you guys could look at trading, nat gas, not just if you're, if the futures contract is too much for you. Yeah, 110 actually. So that thing is crazy, right? But that's another way, again, that we can implement to take advantage. And so I'm looking at KOLD. That's a really nice little, $12 number. By the way, last time we had that peak from 9.5 and went to 5.5 on nat gas. Cold went from 18 to 40. We say, well, why is it at 12 now if it's back to 9.5? Well, there's some remember that there's some machinations that go on because they're using front and back month contracts. So there is a that decay in those ultra ETFs. So you got to be careful with that. But if it does roll back down, even down to 6, that thing's going to go from 12 to probably 30. Okay, so I'll be I'm actually setting some trades up for my members on that as well. Okay, all right. Now oil, nothing new in oil. Bottom line, look at your charts on oil. For me, it's 100 to 90, and even last couple of days, we in fact one of my members had a level at 99.5 on oil, and you can see it's right back down again. I'm not really going to get really super bearish on oil until it actually decisively breaks 90. It hasn't been able to do that. The fundamentals are still fairly strong on oil. There's still tight supplies, all that kind of stuff. So, we had been in a range essentially from 100 to about 125. And I think now, and part of why oil, again, it's perception, is the slowing economy is what was driving oil prices lower, by the way. So one of the things that I mentioned to you guys last Friday, I think it was one of you guys asking me a question, is I said, or actually, no, it was in my session a couple of days ago, in my member session. What drives commodities, and by the way, this drives stocks too, by the way, is in the short term, it's all about perception. In the long term, fundamentals always will come to the fore. And a good example of that would be like, all these stocks that were high flyers that had no profits or whatever, the Pelotons and they were bid up on basically just expectations and again, just all kind of stuff. But every one of those stocks has had a day of reckoning, correct? And so we can use that to the positive and say, if you buy Microsoft today for 2-3 years out, are you going to be okay with that? Absolutely. Do you expect Microsoft to go out of business? So that's the way I kind of look at fundamentals, adding technicals to it. Does that make sense? So same thing on like oil. Oil long term still has very bullish fundamentals. However, they could trade that thing down to 80, right? So it's more of a tactical short term, and that's why we love USO. XLE for longer term trades versus, just the short term kind of stuff. Does that make sense, everybody? All right. Last thing is and again, I'm very focused on the grain markets, right? Why the grain markets? Well, think about food inflation and all that. So they have gotten crushed. And so that flies in the face. So I've had a lot of people kind of just head scratcher going, if inflation is so, food inflation is out of control and whatever. And then, what I do with my members too, when they ask me that, I flash through, look at a chart of wheat, look at a chart of soybeans, look at a chart of corn, look at a chart of, how, they have all just gotten crushed, right? Literally, right? However, are they coming into levels now where they're starting to become attractive? Absolutely, yes. In fact, I gave you guys a level on corn, on soybeans, the other day. I'm looking at, you notice how it's bouncing around $13 a bushel. In fact, there's a couple of nice gaps that were created last couple of weeks. Actually, last Sunday, there was a nice gap in soybeans, and there's another nice gap in soybeans right now that I'm eyeballing at the moment, all around that $13 level, which we're going to be taking a position in that as well. So 13 is really the level you guys want to look at in soybeans. Wheat is also bouncing around the 8, but I think it's going to go down to 7.5, and then 550 on corn. So keep an eye on those. And by the way, also, if you want to take a longer term view of these grains versus just futures contract with the rollover and the leverage, I think I mentioned this. Here they are. You want to look at these, pull these up as an ETF, options and so forth, which I do look at this. You guys know I'm more of a longer term guy than this. The day-to-day stuff is fine, but you know how that works out. So anyways, there's that one. That's pretty obvious, right? This one, pretty obvious. And this one, I don't think a lot of people know this. These are all ETFs, by the way. Yep. So if you are going to take a longer term position, which I always do, these are huge. These are monster moves, right? Like look at nat gas. Look at the moves in corn, wheat, and soybeans over the last 6 months. I'm looking at 6, 8, 9 month type of moves, by the way. I know a lot of you guys are fixated on the short term, and unfortunately, that's how not a lot of you. And let's be candid. How do you guys do near term with all your futures trading? Let's be honest, right? Kind of a touch and go, right? You get good days, bad days, and so on and so forth. So I encourage everybody to start taking kind of a longer term view of this stuff, right? Except for Gallo, he's always profitable. I'm just kidding with you. I'm just joking with you, Gallo. You're a good guy, man. All right. Anyways, you're a good sport, Gallo. All right, everybody. I think that's going to do it for me. I always pick on people, you know that. Hope you guys get my sense of humor. Any questions, comments? You guys, okay. All right. If you don't have anything else, I will see you Friday after the close. I'm going to be doing these consistently Tuesdays and Fridays. So tune in if you want to. Again, just I think we just had earnings from Microsoft. It's kind of a non-event, looks like. We have the Fed meeting, GDP, Apple. So we'll see how that all pans out, and I will we'll revisit all this stuff on Friday after the close. Okay. All right, everybody. Have a great rest of your week. Trade safe out there, and I'll talk to you soon. Again, give me, subscribe to the channel and do all that good stuff for me. Okay. All right. Take care. I'll see you guys soon.